Kitco Mining special coverage of Xplor is brought to you by Radisson Mining.
You're watching Kitco Mining's ongoing coverage of Xplor 2025 in Montreal. My next guest is Jacques Bonneau, author of The Art of Investing in Junior Mining. So, Jacques, 40-year career, you've done just about everything you could possibly do in mining. So you were a field geologist, consultant to mining companies, financial advisor for flow-through funds, also served as president on several junior mining companies' boards. So this book really captures an enormous amount of value and explains a lot of value creation. What was your motivation for writing this?
Well, it was mainly to attract young investors and also to give maybe a kind of a competitive edge to the actual investors and to provide them a good method to evaluate junior exploration companies. That's because I used to give some, let's say, speech conferences, and everybody was asking me to publish a book. Then at the end of the day, after 5-10 years, I decided to publish this book. It took me a couple of years to write it, but now I am quite proud that it's on the market right now.
Great, yeah, and I guess it's faster to write a comprehensive thing once than to write hundreds of very long emails to answer all kinds of questions that you're getting from people who are coming to you with these types of concerns.
Yes. But the book was written in French first, published last year, the same period, October. And Chad Williams, it's a guy, geologist, well-known in financial guy in Toronto that say, well, you should translate your book in English. Then he paid for it. Then I'm quite pleased to see the book now in English. And right now the sales are 70% in English, 30% in French. And the book is sold in 10 different countries. That's and based on the email that I received, I think this book is very useful for a lot of investors.
I imagine it is. So for people who aren't industry insiders or long-term investors in the mining space, can you just explain a little bit the key differences between junior miners and the majors? Like what is special and what is potentially more challenging about assessing junior miners?
Okay, the producer, the major are the companies that are producing gold or copper, and the juniors they are looking to discover a copper deposit or a gold deposit. And when they discover something, now it's the development stage. They have to develop their deposit. They have to prove that it will be economic to be bring into production. And then there is a feasibility study, pre-feasibility study, financing, metallurgy, everything is there. The social acceptability, which is very important right now. You have to do all this process before starting to build a mine. That's the main difference. It's a lot more risky juniors than developers or producers, but the reward is a lot higher.
That's high risk, high reward.
That's right.
All right. So there's an awful lot there. I mean, obviously, in 40 years, 40 plus, you've gone through this process, this very complex process, many times. So, but let's try and get a little bit to the heart of what you're saying in this book. So you talk about the 6 golden rules for investing in juniors. So I guess this is an attempt to kind of focus it down and give you some core principles that you should be thinking about as you're looking at different companies. So can you just briefly explain what are these 6 golden rules and why are they so important?
They are important because if you ignore these golden rules, probably you will lose your time and your money. That's as simple as it is. For example, the first one is a cyclical world. There is up and down in this sector, then you have to develop a kind of a trader habits. You have to become trader. You cannot buy and hold your stock for your life. It's not like buying Dollarama or Royal Bank. You can buy it today, and 40 years after, you will have maybe made 10% per year. But with the juniors, it's different. It's for a couple of months or a couple of years, the stock will go up. But one thing is sure is the stock will go down, or the market in general will go down, and it's a up and down. And then you have to know that, because if you keep your stock all your life, you'll be losing the money. Even the major are like this. If you look at the Rio Tinto, it was at the same price 30 years ago. Then it's you have to know that. But the price of Rio Tinto went down to $4, went up to $60, went down to $4, up to $60. But if you have bought it, they stuck 30 years ago at $60, that's the same price. You are not making enough money. That's the first, let's say, golden rules. The second is that there is, in the evolution of a life of a junior, there is some place where you can make a lot of money and the place where you are losing your money. For example, if you invest when the company is in exploration, you have the chance to make a lot of money. But the risk is high, but the rewards is very, very high. When the company is going into development, it's a lot. You are losing your money. You probably lose 50%. I show it in the book.
Because of the length of these processes, once you're in those stages, you don't get a lot of exciting news, and you're in long processes of approvals.
And then when the construction start, probably it's the best time to invest. And it's why the funds are investing during this period. The reward is not as high as during the exploration phase, but the risk is a lot lower. Then you can make 500% on your investment. When you are in exploration, you can make, in the book I show 10,000%, which is a lot of money.
But the funds like to come in where they know they're going to make 5x. They're not shooting for 100x, but they want to know that they're definitely not going to lose money, and they have decent chance of making 5x.
Yeah, that's right.
And then, so those are the first two. What's the third of these six rules?
The other one is that the discoveries are rare. There is the chance of discovering a deposit is 1 out of 1,000 to 1 out of 3,000. Then the chances are quite low. This is the third one. You have to know that it's when you buy a junior, there will be not necessarily a discovery right away. But the fourth golden rule, it's a world of mini bubbles. There in the book I mentioned, I think it's 25 or 35 way to make a lot of money just by the bubbles. I gave a lot of examples. For example, just a good drill intersection, you can make 300%.
Just because they're going to publish the results for this drilling.
Yes. And then also it's when you are invested in a junior exploration company and the stock, the price, let's say the metals that they are looking for, the price double or triple, like the rare earth right now, antimony right now. If you have a junior exploration company looking for antimony, you will triple, sometimes you will make 10 times your money, because the metal is becoming the flavor of the month.
Right.
That's another thing. When the management of a company change, sometimes you can make 500%, especially if the management has a lot of experience. If the management invests in your junior exploration company, that's a good way to make a lot of money for the investors.
So these are what you're describing are events that are more news events than necessarily These are, well, I mean, the price of the metal, for example, is quite fundamental. But these are all opportunities that juniors will give you to profit from a news event, a drilling, a change in management,
Yes.
a recent investment, where because I guess they're smaller companies, and because they don't have production yet, so the only thing you're basing the value on is these news events. So I guess they have an outsized impact on the value of the company.
I gave 40 examples, different examples where the stock was going up because of the news. Most of the investor, they are making their money there. These mini bubble, I think I have an average. They last normally between 8 and 12 months. And then after, for different reasons, the price of the metal is going down. The next drilling campaign is not so exciting. Then the stocks start to go down. But you have to learn to trade. You have to learn how to trade, when to trade, because this is very important. It's where you are making most of your money.
Right. No, this was very interesting, where you have all these charts at the back of the book. You have all these detailed charts that show not just, the price action, but you're explaining exactly what happened to create these very, very dramatic price moves in all these different companies. Just pages and pages of companies with a specific analysis of like, here's the news came out, or this was a drilling result, and then you get to see the moves. So it's very, very valuable to be working backwards from this type of or in this case working forwards, but with this type of a historical analysis of the price action and what exactly were the drivers. So very, very helpful for looking forward as well. So then, what's number 5 and number 6?
Okay, number 5, it's what I mentioned is that when you read this book, you will see that probably only 20% of the junior exploration companies that are listed on the Canadian Stock Exchange worth your evaluation. You will look at them and say, well, okay, this one is no good. Then you will find that only 20% of the junior exploration company merits your attention. The rest, you just go past to another one. Then it's the method of evaluation that will give you that it's 20% only. There is 3,600 junior companies listed in Canadian Stock Exchange. Then there will be 20%. It's 250. Let's say that merits your attention. It's not 3,000. It's only. And the other one is the Pareto law. It's 80% of your profit will come from 20% of the companies in which you have invested. And this, I check it with some other investor. It's always the same thing. It's 2 companies out of 10 will make 80% of your profit. You have to know that. And then one thing is that when a stock price is going up, it means that you have to let this stock going up, because this is maybe your 20% of companies that will make your profit.
Right. So you can't be too quick to exit these when they're rising, or when you're in one of those mini bubbles.
Yeah. When I say that in the book is, if you are too nervous, then sell 50%. And then you will catch up your money, your investment, and let the other 50% riding. Right. And then you will learn. And this is the best way to learn. In fact, you are not losing any money. You just let them running.
Was that number 5, or was that 5 and then 6? That was number 6. I see. Okay. So then, let's think in terms of the current market right now. So applying some of this logic to where we are today. Now, we were here last year. The metals were doing well. The juniors were not doing particularly well last year. They were optimistic. They were eager. They were hungry. They weren't necessarily flush with cash and investment. But we've seen the majors do extremely well this year. And we are now seeing some of that money, as it often does, coming down into the juniors. So where are we, based on your experience and based on this criteria, where are we? Where is the mining sector today, and what are the types of opportunities, and what are also potentially some of the risks for people looking to invest in juniors in October of 2025, after we've already seen a lot of money come into the sector?
Well, I will just talk for myself. Okay, it's my guess in September 2024. My guess, based on different criteria, that the gold price will go up to $3,500. The reason behind this was the first Fed cut. They cut the interest rate in September 2024, and the statistic that I had from the first cut in 2001, 2007, and 2019 was the gold price will go up by 32%. That was the average. Then when they did the first cut, the price of gold was at $2,400 plus 32%. It means that the price of the gold will go to $3,500 for me. When the price of gold reached $3,500, I sold half of my position. That's the way I did it.
You're following your own advice, essentially.
More or less. And now I see, now I am just looking to see the price of gold went up to for more than $4,000. I don't know if it will still go up. I know that the banks, JP Morgan, forecast that it will go to $5,000. For me, I think it's I will be quite comfortable with the market for the juniors and the producer. If the price of gold stay between $3,500 and $4,000, everybody is making a lot of money, even the investors. Then you don't need $10,000 to make money right now. But I would say one thing that I check, and I spend a few pages on it on my book, is the U.S. dollars. Normally, in the last 50 years, when the U.S. dollars is going up, the price of gold is going down. Now the U.S. dollars is high.
Strong, yeah.
It should go down. Everybody is saying that for 2 or 3 or 4 years, that the U.S. dollar should go down normally. If the U.S. dollar is really going down, then the price of gold might go to $6,000, $7,000, $8,000. That's the way that the behavior of the relation between the U.S. dollars and the price of gold in the last 50 years.
Right.
Then,
and this is what's interesting, is that we've seen this type of a run-up in the price of the metal in an environment where the U.S. dollar has not been particularly weak. The U.S. dollar has pulled back a little bit, but we haven't seen pervasive U.S. dollar weakness driving gold. What we're seeing is an appetite for gold from the investment community, even in an environment of a relatively strong U.S. dollar. So that's so then the upside for gold, if the U.S. dollar weakens, is enormous, given the performance we're already seeing in a strong U.S. dollar environment.
I agree. I know that Pierre Lassonde forecast $17,000 for the price of gold in the next 3 years.
3 years?
Yes.
Boy, that's pretty aggressive.
I watch him on the TV, and I was surprised, but well, it would be wonderful if it happens.
It's based on a calculation.
Well, it's a forecast, but you know, my forecast lasts for 30 seconds. Okay, after that, I don't know. It's I'm not a big forecaster, and I don't like to give these advice to people because it's not my job.
Right. But also, I guess it's partly coming from the junior mining investment world, is you have to see things, you're assuming that things are bubble. You're assuming that things are short or medium term. You're assuming that maybe you have a few months or a year to do something, and then it's time to get out. So you're not just painting very high targets for things and then you ride them forever. So I guess it comes from that world as well.
Yeah.
And then I just wanted to ask if you have any specifics. So this is an entire book of how to judge, how to assess, and how to time investment in juniors. and we've looked a little bit at the current state of the market and potentially what the timing would be. So can you share with us any specific junior mining companies that fulfill these criteria for you?
Yeah. Well, just by going on the floor this morning, I see a company called Azimuth that is not far away from here. They have a nice gold discovery and a nice nickel discovery in the James Bay area in the province of Quebec. That is quite interesting for me. I was on the board 2 or 3 years ago of a company called Naovi. They are developing a niobium deposit in James Bay area in Ontario, and this is a potential deposit like the Naobic deposit that is in the mining right now in the province of Quebec now for the last 60 years. But they have the same thing. It's a copy of Naobic in Ontario. And now they have to solve some problem with the First Nations, but it seems that they are finding a solution. And if they do it, this is a stock that everybody should watch in the next, let's say, months. I have another company. If everybody is looking for a lithium deposit in Quebec, we have Q2 Metals. They have a nice, huge deposit just north of Matagami, and there is a road. This is a nice. I think it might be the next lithium deposit to be developed in the province of Quebec. I'm not sure, but there is Pro Metals that they have 8 million ounces in the Val-d'Or area, and this stock is undervalued. It's well located near the other mines. I think it's a buy for me. And I am also on the rare earth minerals, and there is a company called Aclara. Aclara they are developing a rare earth deposit in Brazil. Now they make a deal with the U.S. They will build a plant in U.S. And I think
for the processing.
The processing, yes. They will mine it in Brazil, processing it in Louisiana, and this is a very interesting company because I know these deposits are similar to the deposit in China, and they are very easy to mine, to process. Even to process, it's not too complicated, let's say.
Right, because I know some of the rare earths, the processing is really the bottleneck, and some of them are a nightmare to get permitting or to just to build out. So that's very encouraging.
But there are two types of rare earth. There are the rare earth which is on the hard rock, but these rare earths in China and Brazil, they are in the clay, ionic clay, and then it seems that the rare earths are very easy to extract. Yeah, it's and the process is well known, and we will see. And maybe I have another.
Yes, please.
First Phosphate here. They're located in the province of Quebec, near a port. Very well located, nice deposit. I like this company. I like Getchell. They are in Nevada. They have 3 million ounces there, and I think the value per ounces of gold is only $15 per ounce of gold, which is very low.
Wow.
That's might be something that the investor should look at it and say, use the book and see if
use the criteria in the book. But this is based on your experience and based on those criteria. These are interesting.
Yeah.
All right. Well, I really appreciate you taking the time to talk to us today. There's an awful lot in here, and like as you mentioned, there's lots of specific examples, lots of ways of analyzing and understanding the industry, the specific companies, and lots of really concrete examples of ways that this actually played out. and entries and exits, looking at historical charts, which is also very interesting.
Yeah, and I try to show to everybody that it's when to sell. As I mentioned to you, it's very easy to buy, but it's very tough to sell. Then I gave some criteria to when it should be the time to sell. That's important.
That's when you make
You make the cash.
right. Well, thank you so much for joining us today.
You're welcome. Thank you very much.
I'm Ernest Hoffman for Kitco Mining. Keep it here for more ongoing coverage from Xplor 2025 in Montreal. And don't forget to subscribe to our YouTube channel.
Kitco Mining special coverage of Xplor is brought to you by Radisson Mining.